Good day, everyone. I'm Pierre Léveillé, President and CEO of Koryx Copper, and we're busy exploring for copper in Namibia and Zambia.
You are indeed, and in fact, I was due to see you in Toronto, but you got a little bit poorly. I think there's a bit of a cold going around, and you're something a little bit more serious. You okay now?
Yeah, I'm better. My voice is still a little bit shaky, but it's a lot better. Last week I had no voice at all, so...
So it would have been wouldn't have been much of an interview. Hey, well, look, I wanted to catch up with you because obviously off the back of, getting back into country, get drilling again, you've been putting out some results and you how do you put it, issued as an amended PEA for your Haib Copper Project. So I want to talk to you about all of the above. Why don't you give people a little bit more of a background as to, what you're sitting on today, maybe even run through some of those PEA numbers.
The Haib deposit is a very large tonnage deposit. We're talking about a 43-101 resource, indicated and inferred of 850 million ton at 0.31% copper in average. So it's a large tonnage, low grade. The PEA that we have done in February 2021, which we will update this year, is showing at $3.50 per pound of copper. And I think we can use it now because the copper is over $4. The NPV after tax is $1.3 billion US. The IRR after tax is 36%. So it's very strong economics in a deposit where we are at the moment increasing the grade and where we will update the PEA with, inflation adjusted numbers. And it's very, very strong economics. We know also that we can most probably double the tonnage, but at this point in time, it's not a question of doubling the tonnage. It's really, can we increase the grade and what are the economics? And that we have good answers for that.
Right. Well, if we don't mind, can we look at some of the results that come back? Because I want people to understand is what you're looking at. So it is big for sure. And obviously we're talking about PEA, so you need to get through a few more economic studies here in terms of firming up the numbers and firming up the grades and the margin and the recoveries and all of those wonderful things. The last press release from 15th of Feb that I'm looking at talks about 124, 125 meters at 0.36 copper equivalent. So what kind of ore body have you got? What is the mix of metals in the ground? And why do you feel that those grades are going to be good enough?
First, our PEA and our past tests with metallurgy tests showed that at 0.31% copper, it's economic. So we have very good economics at 0.31% copper. Of course, the margin is a bit tight because we were looking at a 0.25% copper cutoff grade. So in improving the grade, anything that we have above 0.31% copper, and we have a lot of long extension. The last one was 0.36, but we have published the one before was 200 meters at 0.49% copper. So, and we have a lot of these at 0.40 and with grades going up to 2% and even more on very wide extension. So we're on in the right, and that's for the last 23 holes. It's a quite important number of holes that are showing that we can increase the grade. Now, to get back to your question, the deposit is mostly copper with a little bit of moly. Moly has never been assayed by the other companies apart Teck, and so we were not having enough molybdenum in the assays to include that in the resource estimation. Now we are assaying for moly, and at the end of the day, when we will do our new resource estimation, we'll see if we have enough to at least make an inferred resource including moly, and we don't have a clue either if it's economic. So it's we know the grades are good, but we don't know if it will turn out to be economic. So, but it worth testing it. But just as an example, that 0.36 copper equivalent, in fact, is a 0.35% copper only, and 0.1 moly.
Look, you're less than a $20 million company, right? With sitting on a big asset with a capex of somewhere between 340 and 350 million bucks. And the sustaining OpEx of, just about $100. So we need to understand how companies like you go through the phases here. So you've got something big, but a small market cap, not a lot of cash right now, and you've got to work a way to kind of navigate your way through the process of getting economic studies done. How are you going to do it?
But the first thing is our market cap is low because, as you may remember, we lost the license, and for 2 years there was a legal battle. At the time we lost the license, we were having a market cap near 40 or 50 million Canadian. And we were on our way up. So now we lost that market cap, and we have to build that momentum again. So the idea is to raise not too much money at a time, do some work, add value, raise more money, do some work, add value, and get to the point where our market cap will be in a better position. And I feel this year it's going to be the case where we can raise larger amount of money. Now, keep in mind one thing. It's not very usual that you will see a very large project like this in a small cap company like Koryx. It's unusual, but it's there. We have it. So at the end of the day, most probably it will be for the like of a major or a large private equity fund to come and make a deal with us, buy the company, buy the project, come and join venture. It's not going to be necessarily Koryx that will bring it to production. Our job now is to make sure that we add value on the project. And that's what we're doing. And then from there to bring it to feasibility study and even eventually apply for a mining license.
But what does bring value mean? Because you can go and raise a little bit of money, do a bit more drilling, and your aim is to improve the grade, right? And increase the grade here.
Yes.
But with exploration, there's no guarantees. So what information have you got? What, drill program have you got planned out, which leads you to believe you'll be able to find the higher grade stuff? What do you know?
When we took over the project from Teck, we had all the database on 60,000 meters of drilling, plus the core on site. So we started with a very strong, let's say, data and knowledge. And what we discovered is that it was treated like it's a porphyry. It's the type of deposit. And these companies before us, Rio Tinto, Teck, have considered it's a porphyry, typical what you see in Chile and Peru, where they are big tonnage, low grade, and the grade is fairly even all over the depositional area. You don't have structures that are controlling the grade, and I mean a quartz vein, shears, faults. So what they do for that type of project, they will drill vertical hole, spaced by 150 meters, so white space, and they're chasing tonnage. They want to do bulk mining. So let's chase the tonnage, and they don't bother too much about the grade until they arrive near feasibility study, where they will drill more for the grade to organize the mineral resource management for the mining. Now, when we took that over, we realized that there was a large number, tens and tens of structure that we were seeing at surface that have never been considered. They have never been mapped anywhere. So because of the idea of going vertical hole on a wide space, they were not really bothering. They were to bother about that later down the road, okay? And near feasibility study, as I said. So we decided to map all these structures and see how they fit with we've plotted the drilling result on top of it. And we realized that everywhere there's a shear, a quartz vein, a fault, there's higher grade around it. So we decided, and most of these structures are vertical or subvertical. So when you drill wide space vertical hole, you miss quite a lot of that material. So what we've decided to do is to drill incline holes across these structures and see what it will give. And that's what we have since in 2021, we published, if I remember right, I think it was 14 holes. Now we've published, we have published so far 23 holes out of 25 that are showing large extension with grades well above 0.31% copper. So we know we're in the right territory to improve the grade. And what we do is that we're not drilling outside the deposit. We're infill drilling between the drill holes that are already existing.
How long are you going to give yourself in terms of dollars, in terms of meters, to be able to go and prove that the strategy of yours works and that you are finding higher grade before you say, actually, this is the return on investment is just not there for us. Let's go find a partner? Or are you already talking to groups about coming in and whether it be JVing or farming in? I mean, whatever alternatives you're looking at.
You have to understand that the model of the deposit has been, the center of the deposit has been divided in 4 pits, okay? And these 4 pits host about 200 million ton out of the 850 million. That's where so far we find the higher grades. So within these pits, now we have already enough holes to show, out of 60 holes in that area, to show that we are improving the grade in that specific area. And that specific area will serve as a starting pit. So you will have a starting pit with a seriously improved grade. And we still have to drill another, if I'm right, we will have results on another 19 holes. So at the end of the day, we will have 70% of the holes that were there that are showing higher grade. So we know that area, that 200 million ton will be higher grade. To what extent it remains to be known, to be seen. And we are at the moment preparing for the next mineral resource estimation, 43-101. The MSA group of South Africa has been hired to do that. They were on site this week for their site visit. And they will produce the 43-101 updated resource end of May, early June. So that will be a very important tool for the discussion we already have with some private equity funds and some other companies. There's already some discussions around, okay? But with these type of funds and these type of companies, it takes time. You know, it's these things do not happen quick, but that's fine because we're on our way. We're working. We're advancing, and at some point in time, I'm pretty sure we will have some good proposals around that.
Okay, and so just on the 19 holes, are they already drilled out and you're waiting for assays, or you're funded to drill 19 holes?
No. There's left 6 holes. 13 have been done, and we're waiting for assays, and 6 are on the way now. We expect to complete that phase of the drilling program mid-April to end of April. Okay, we're not very far from the end.
Okay, so we'll have all the assays back by when? Is it speeded up in country?
Mid-May.
End of May. Okay. So that's kind of good. Now, if you are having these sorts of conversations and proposals, etc., you know, the big, I think one of the big issues for copper projects is they kind of get planned out so big because it's more efficient to do that the kind of capex numbers start to look absolutely crazy.
Yeah.
Have you been encouraged by, and because we've seen this model change slightly in the market, where some companies are encouraged to perhaps think smaller initially just to get things going, just get cash flowing, stop being dilatory, etc., and kind of show a route to market. I mean, how are you looking at how you come at this? Because the PEA is obviously a decent size. It could be bigger, but maybe it could be smaller.
Yeah, in our PEA anyway, before it has been reviewed by British Columbia Security Exchange Commission, we were having different models, including 8 million ton per annum throughputs. You know, but they have asked us, because 43-101 said it, we had to remove all the other models, keep only one base model. So that's what we did, and so our idea is to start small. And because no matter what, as I said, it's not going to be for the like of a small company like Koryx to put it in production large scale, but it does not prevent us to do it, small scale and start. We won't wait for the right proposal because we can sit there for years. Who knows? It will come because the big companies are in need of large deposits, and in increasing the grade, that is certainly improving their appetite for that project. But in the meantime, we have to plan as if we are going ourselves in production.
Okay, and so how are things in country relations with Ministry of Mines? Obviously, there's a new, quite quick, the new is he president? New president.
Yeah,
I've forgotten his name. How are relations in country?
Very good. We have very good relation. The situation we had with the Ministry of Mines a couple of years ago was, now everybody knows there was some corruption in the system, so that has been cleaned out, and we have very good relation at the ministry with the new people on board. Some of them will come and visit the project early in April. We have relation like we were having for many years before we had that specific portion where things went wrong.
And what have you got any needs from the ministry in terms of things that you'll need? You obviously got the license back, which is great, and that's obviously changes things around dramatically. But you got to play catch up here. Are there any other permits required from them, or anything else that you're going to need from them?
What we do when we renew a license, we propose a budget and a work program for the next 10 year, and then if you adhere to that program and let's say cover 70 or 80% of it, if you're not able to cover the full, but at least you cover a large part, no problem. That's our commitment to the development of the project that they take.
Right. And it's fine. If I look this year, tell me what you think is important, because obviously with 6 more sets of assays to come and, 13 holes in here, and you started, putting those out in the market, I've got to try and work out what the possibility is of your company kind of being able to move through those phases. And even if part of that is bring a JV partner in or bring a farming partner in, that's fine. Because I think for a lot of companies in the last year, the name of the game was survival, right? So you've got a big asset here, and I think people's expectation is that, well, it's going to be too tough for you guys to actually deliver. So what are the moments that you think we should be looking at, just so we can come and talk to you whenever those things happen?
The first thing is that we will complete that drilling program in mid-April to end of April. We will have the new resource estimation mid-June, most probably. And then from there, we will update the PEA it's not a very big job, but we will certainly have a different grade. So just starting there, it's worth doing it. And also it was 2021, so we need to adjust for inflation. And then we will raise money in between now and then. And we plan to start drilling again September, October. At the same time, if we have enough money, we will start doing the feasibility study on the project. We have also an environmental impact study that is running at the moment, because if we want to apply for a mining license at some point in time, we need that. And that's pretty long to do. So it's a minimum 18 months, because you need to cover 12 months. You need to cover all the seasons.
Okay, well, that's kind of exciting. There's a lot of moving parts here. So there's a lot of things to talk about this year. Just down in Namibia, but what's happening up in Zambia?
Yeah, Zambia. That's the other thing. In Zambia, we have completed some geophysical survey. We just await the interpretation and 3D modeling. With this, we will finalize the drill targets. So on one of the projects, Luanshia West, where we have done some sampling, identified 10 large copper anomaly and 13 large cobalt anomalies. We have done that geophysical survey. The main goal of that geophysical survey was to define the depth at which we should drill. And now we will have some drilling targets for a small program, probably 2,000 meters. Not a lot of money has to be spent. First, to test these anomalies. Are they real, or are they just on surface? So, but we're in a very, very good area. So I'm pretty curious to see what we will get there, because I think we're near a potential discovery anyway. So and if everything's right, we will hopefully start drilling August, somewhere like this. It's not a long program. So interestingly, in Zambia, we attract interest from larger companies. There's a lot of activity in Zambia at the moment, where big companies, private equity funds, everybody is there. Everybody wants to have a piece of ground. So it's pretty interesting to see.
Well, big copper country. So
course.
Yeah, why not, right?
Yeah,
Barrick, Rio, Glencore.
These companies are not talking to you when projects have not been drilled. Now, at this moment, they're talking to us. So wow. Okay.
Yeah.
So it shows the interest. It's
like bankers. They only offer you money when things are good.
Yeah, that's it.
Not when you need it.
That's it.
Well, look, Pierre. I'm really glad we talked, actually, because it sounds like it's kind of like getting itself back on track and taking care of the important pieces in terms of the paperwork, the analysis, the reporting, and clearly the drilling as well is going to be key to this, and to help understand the economics. So
Yeah.
I appreciate you coming on today. Stay in touch. Sounds like a lot moving, and we'll follow you with keen interest, I suspect.
There's a lot to come, so I think we'll have a very interesting year. A lot of fun to come.